Well, is it crazy, John? I love talking to folks like you. You guys have been investing for a long time. You've seen a lot of market cycles. Like there are, how do you kind of factor in this one and the stuff that feels like every morning we can wake up and there can either be something out of Washington that really impacts the trade, and then there are days it doesn't. So how do you kind of work all that into strategy?
Well, I think of the 43 years.
The noise, if you will.
Yeah. I mean, the 43 years of Ariel, we've had lots of ups and downs. 1987 crash, of course, 08 and 09 financial crisis. But this is the first time we're seeing like we're making this crisis happen. We're making a conscious decision to make policy decisions, whether it's the tariffs or now whether it's the war. And that's causing all this drama and all this angst. And that's something that's unusual and different for us.
How do you trade that?
Well, I think on the one hand, you trade it is that we know that President Trump cares about the markets. He sees that as a scorecard. So the one positive thing you can pluck out is that eventually he figures out a way to adjust to get things back to a calm state eventually. But you just hope he doesn't go too far, one more time and stretch and do something that really he can't pull it back.
I'm curious about your view on this, that as it does not relate to markets. It sounded like you were saying that we've entered a new paradigm, at least with the decisions that this administration is making. I'm wondering how you're looking at that. We understand that what the president wants to achieve with tariffs. I would not say I understand what he wants to achieve right now yet with Iran. We're still waiting to hear exactly what the U.S. wants to achieve there. But how do you view this, not necessarily with regard to markets?
Well, what I worry about is that Iran does something that's extraordinarily painful for America or another part of the world. As they fight back and feel like they have to defend their honor, they'll just do something that will be, we'll all have a hard time living with over the long run. So we all saw what happened when the World Trade Center collapsed, and all the trauma and drama and extraordinary heartbreak from that situation. And you just hope that nothing like that happens again ever in the United States or in our friendly countries.
Got to say, I went right there after this happened, and that's what I thought about retaliation. Any of us who were here in New York during 9/11 remember it like it was yesterday, and it does make me a little scared. And I'm not an alarmist, but it did make me think, okay, what's the retaliation of all of this? We're going to set that aside for a moment.
We can shift back to markets, Carol. We can shift back to markets.
I want to go back to something you said actually in January, and I was doing some read-in on this, and you said the U.S. will likely slide into a small recession at the end of the year. Stock market will drop as average income consumers struggle with high living costs. And this was, I think, at the Executives Club of Chicago's annual Outlook event. And you talked about the Dow maybe declining 15 to 20% this year. But it also got into this dichotomy, which I think really increasingly, I know it bothers us, wealthy consumers doing okay, so many other consumers are not. So talk to me about that. Do you still feel this way about maybe we see some kind of small recession?
I still do. I've never seen anything quite like it. I know a lot of people have been talking about this, but you're right. When people are still going and spending money on cruise ships or going to Las Vegas for experiences, doing things that are really the wealthy people can do.
Right.
But the average American is really, really struggling. I go to McDonald's pretty much every day, and you see how much it costs to, buy your drink and your French fries and what happens, and you realize that ordinary Americans are having a hard time covering the cost of just day-to-day life in America. And I think that's a real challenge for our economy, a real challenge for certain industries.
It's the so-called K-shaped economy is something that we talk about a lot and we think about a lot. Are there policy proposals or are there policies that the U.S. government could enact that would make the gap between the very wealthy and the poor, or that would bring back the middle class, I think, is something that we talk about a lot, too. Is it something that you think the free market can solve? How do we get out of this?
I think the free market will solve it. America always goes to extremes, and things ultimately get back to normal. As Warren Buffett says, our capitalist democracy is the best system ever invented. And so we'll ultimately put the right people in place, governments will shift and change, and people will be able to get to a place that I think will bring back a better life for folks from middle America. And I think that's really, really important. I think keeping interest rates reasonable, keeping inflation low is really, really important, creating the other tax policies that are fair and equitable. So I think we'll get there. It takes a while, but we'll be on our way back, and I think we're in that process now.
So you're optimistic?
I'm optimistic that we will create the wealth gap in our country will start to diminish over time.
So when I look at, I want to talk a little bit about the investment environment. We saw broadening out, certainly, in terms of where investors were placing some bets here. Where do you see some mispricing within the market where you think that presents some opportunities for investors?
Well, I think right now the financial services companies are what I think have gotten to be extremely cheap. They've gotten very, very worrisome about what's happening with private credit, as we all know, and you guys are reporting on and talking about all the time. But I think it's overdone. I saw David Rubenstein speak last week. He was interviewed by our chairman, Charlie Bobrinskoy.
Yeah.
And his optimism about Carlyle, I thought was striking. And I think they've gotten sort of a hit with what's happened in private credit everywhere, even though they have a small exposure to private credit. There's also been this huge concern around private equity that people won't come back, that it's going to be harder and harder to raise funds. I think as interest rates get lower, companies that have the kind of brand that Carlyle has will be able to do extremely, extremely well. And then secondarily, a company like Lazard, one of the world's best investment banking firms. Peter Orszag has done a great job in getting that company on track. It's moving in the right direction. And being one of the best investment bankers, they're going to benefit from all the deals that are going to happen. In this deregulated environment, it's a really a great opportunity for companies to buy, merge, do things that are right for shareholders.
It's really kind of refreshing. I haven't heard you say AI.
Yeah.
Where does that fit into?
Well, it's not a value play, right?
How does that factor in? Because I do think the AI trade has evolved over the last 2-3 years in terms of where investors want to place their bets. And now we're talking a lot more about inference and agentic AI and kind of where that's going. But I think we still don't know a lot.
We still don't. And we're working really, really hard on it at Ariel. We're using some of the top academic minds at the University of Chicago to help guide us as we think through which industries will be the most disrupted, which ones will not be disrupted, and where maybe the fear is overdone. So like for us, one of our favorite stocks is Jones Lang LaSalle, JLL. Real estate brokerage is still an important business. It's a complicated business. If you're a CEO trying to move hundreds of people from one office tower to another, one campus to another, you need a great broker who can help you see and have the insights that are there. So I think AI helps to make them more efficient and more effective, and AI is not going to replace that real estate broker the way some people are afraid of.
So much of the concentration, literally, and when it comes to coverage of the market, has been mega-cap tech names. And I'm wondering if it's possible, in your view, I think I know what you're going to say, but if it's possible in your view to outperform mega-cap tech or the S&P 500 by excluding those from a portfolio, by finding those value names.
Well, I think so. I've been very public. I think the large cap growth stocks have gotten way, way, way too expensive. Everyone's fallen in love with that trade for quite a long time. But I've seen this happen time and time again in my 43 years at Ariel, but also saw it throughout history. The Nifty 50s during the 70s, the Nifty 50 stocks. You saw it during what happened in the go-go 20s. People just fall in love with the sector and think it's just going to go up and up forever, and the small stocks get neglected. They get misunderstood. They're not as well followed. And so opportunities gets created because everyone's fallen in love with this hot, shiny dollar out there.
And you think that's happening right now?
I really, really do. Up until most recently. I mean, I've seen the Palantirs of the world and others have finally started to have some of their comeuppance. It reminds me of what happened during the turn of the century when the internet bubble finally burst. So you're starting to see some signs that the world is coming back to rationality and people are realizing some opportunities in their smaller names.
When it comes to the investment environment, are you anticipating that investors need to be thinking about it's going to be a higher rate environment going forward, and so you've got to think about that and what it means in terms of valuations?
Well, I think I'm more optimistic about rates. I think that
meaning they'll go lower?
I think they'll go lower.
Okay.
I really do. I think that the new Fed chairman is clearly someone who's going to want to make the president happy. He's going to do everything he can to bend the will of the Federal Reserve.
Doesn't that make you nervous, though?
If
it's not fundamentally based?
Long term, it makes me nervous.
Okay.
But I do think in the short to intermediate term, if we keep rates lower, it's always good. Low rates are always positive for the markets. And, of course, there's some things will come back to haunt us because of it.
Yeah.
But I think that's more longer term. In the short term, I think this will be something that will be help the market stay where it needs to be and be sort of a tailwind for the markets.
It doesn't sound like when one of the narratives it felt like we were coming into was, I mean, think about President Biden before President Trump won the election. Like, the U.S. was the best place to invest. When President Trump came in a year ago, again, like, the U.S. market was the place to invest. And then we were just thinking about the U.S. being uninvestable. Like, that became a narrative.
And to a certain extent, even though the U.S. markets did well last year, there was a lot of underperformance compared to global markets for 2025.
Is that something you think a lot about, or that we are seeing investors start to diversify away from the U.S. market, or that's impossible because of how deep and how liquid the U.S. market is?
I think it's really, really hard to diversify away from the U.S. markets in any meaningful way. We still have the deepest economic system, the most successful economic system, the best universities in the world. We're the United States of America, and even though there's been all this drama and trauma right now, ultimately people want to come back to the country where you can count on our currency, you can count on our democracy and the regulatory environment that we have, and just all the great success we've had, Wall Street to Silicon Valley. I think that America is the best.
So this is just a blip?
I think so.
It's because it's interesting. I think we try to figure out the lasting impact of the last year or so.
Well, one thing that we're trying to figure out is the impact that immigration or a lack thereof will have on the economy here. If we think about in recent years, Americans not having enough babies, and one of the ways that has been supplemented and we've been able to avoid turning into a Japan, for example, is because we have had people come to the United States and increase economic activity that we wouldn't have had we not had that. And I'm wondering how we have to adjust our expectations for a world that is increasingly, I was going to say isolationist, but we're not necessarily saying that right now, but one that looks inward toward itself more than looking outward.
And you only have 30 seconds to solve the world's
I'm
problems.
sorry. That was my bad.
Well, I just think
we got lost in this.
In this business, the ability to see the future is the most important thing.
Yeah.
And so if you look out 2 to 3 or 4 years, we will be past this crisis, this isolationism, the challenges that we face. One way or another, you're going to have a new president, you're going to have a new government, and I think America will still be in a strong, strong place.